Let's talk about CONCOR, the Container Corporation of India. For decades, this company has been the absolute backbone of India's rail logistics, a true giant moving pretty much everything across the country. But today, that giant is standing at a major crossroads. So the big question we're asking is this: is CONCOR about to reawaken stronger than ever, or is this an empire in a slow, managed decline? Let's break it down.
All right, first up, the giant's dilemma. To really get what's going on with CONCOR, you first have to understand the central problem it's facing right now. And really, it's a classic story of a massive market leader that's suddenly feeling the heat.
You've got to understand, for years, CONCOR has been a true Goliath. I mean, it operates this huge, almost irreplaceable network of over 60 terminals that crisscross the entire country. This incredible infrastructure, built up over 35 years, is its superpower. It's the reason it became the go-to, the default choice for moving containers by rail.
But here's where the story gets interesting. This is the first major crack in Goliath's armor. In just 6 years, its market share has just plummeted from a totally dominant 74% all the way down to 54%. We're talking a 20-point drop. That's a crystal clear sign that smaller, quicker competitors are taking bigger and bigger bites out of its business.
And you know, when that happens, the smart money gets nervous. In just 2 years, foreign institutional investors have slashed their stake in half, dropping from 24% all the way down to 12%. So what are they seeing that's making them run for the exit?
To figure that out, let's pop the hood and take a look at the financials. Because, as you know, the numbers don't lie. This is where the real picture starts to emerge.
So check this out, because it's kind of weird, right? The company's container volumes, the actual number of boxes they're moving, it's up by about 10%. But look at the revenue. It's barely moved. Now, what does that gap tell you? It means one thing. CONCOR is having to slash its prices just to keep its trains full. It's working harder, moving more stuff, but earning less for each box. That's a classic sign that its power to set prices is disappearing.
But hold on, it gets even more complicated. You have to ask, where is the profit really coming from? And this is critical. A huge chunk of it, over a third of its pre-tax profit, isn't even from moving containers at all. It's something called other income, which is basically just interest they're earning on a massive pile of cash they have sitting on their balance sheet. So a big part of CONCOR is basically acting more like a bank than a logistics company. And this chart just makes it crystal clear. Look at that. Over 1/3 of the profit has nothing to do with its main business. So if you strip out that treasury income, suddenly the valuation of the actual logistics business looks a whole lot more expensive. And for analysts who care about the quality of a company's earnings, that is a major red flag.
Okay, so that's the gloomy picture, but that's only half the story. Now let's look at the optimistic view, the bull case. And it hinges almost entirely on one single, massive, game-changing infrastructure project. And that thing is the Dedicated Freight Corridor, or DFC. Now this is a huge deal. It's a brand new high-speed rail network built just for goods trains. Think of it like a new superhighway, but for cargo. For a company like CONCOR, this isn't just an upgrade, it could totally revolutionize its entire business model.
And here's why it's such a game changer. Just look at the speed difference. We're talking about more than doubling the average speed, from a slow and steady 25 kilometers per hour to a much quicker 60. This one change could make sending stuff by train way faster and even cheaper than sending it by truck on long routes. This could potentially reverse all of that market share loss we just talked about.
So the bulls look at this and say, okay, CONCOR is perfectly positioned. It's already seeing record volume growth. It has that fortress of a balance sheet with nearly 2,000 crores in cash, and the DFC will let it do really efficient things like double stacking containers, which can slash costs by 30 to 40%. The thesis is simple, right? Connect this powerful machine to the new superhighway, and it will just soak up a huge share of India's economic growth.
Okay, that sounds pretty great, but there's always a but, isn't there? Let's talk about the other side of the coin, the bear case. And it all comes down to the problems CONCOR faces, because it's a government-owned company, what you could call its PSU shackles.
And that brings us right back to this chart. This is the bear's Exhibit A. This market share loss isn't a fluke, it's not a one-off bad year, it is a clear, multi-year trend. Private competitors are consistently proving to be faster and more agile, and they are steadily eating CONCOR's lunch.
So the real question is, why is this happening? Well, the answer is that CONCOR is what you'd call a price taker. Its biggest single cost, the haulage charges, is actually set by its own parent, the Ministry of Railways. On top of that, it has to pay a massive land license fee just for using railway land.
This means, unlike its private rivals, it can't really control its biggest costs, and it can't make quick business decisions. It's kind of like fighting with one hand tied behind its back.
And the one thing that could have fixed all of this, privatization, well, that's completely off the table for now. As this quote shows, the sale is on hold indefinitely. And that leaves the company kind of stuck in limbo, unable to compete at full strength against its nimble rivals.
So there you have it. Two compelling but totally opposite stories. On one hand, you have a sleeping giant about to get plugged into a superhighway. On the other, a slow-moving giant tied up in red tape. Let's bring it all together and see what the verdict looks like.
The final verdict from the analysts we reviewed isn't a strong buy or a sell. It's a hold or maybe accumulate on dips. And that really tells you everything you need to know. The potential upside from the DFC is massive, but the risks from its government structure and the competition are just as real. It's a true toss-up.
So, instead of a simple answer, here are the 4 key things you should be watching yourself. Think of it as your own personal CONCOR dashboard. First, keep a close eye on that market share. If it drops below 50%, that's a huge red flag. Second, watch for news on the DFC. Is that critical JNPT port connection operational by late 2026? That's a huge win for the bulls. Then, look at the money. Are they finally stopping the price cuts? And is volume growth staying strong? If you track these 4 things, you'll get a pretty good sense of which way this story is heading.
And that brings us right back to our final question. Is this a story of a giant reawakening supercharged by the DFC? Or is it an empire whose structural problems will just lead to a slow, steady decline? Ultimately, an investment in CONCOR today is a really high-stakes binary bet on whether the promise of the DFC actually becomes a reality.
Okay, before we wrap up, just a quick but very important disclaimer. The analysis I've shared here is purely for educational and informational purposes. I want to be clear, I am not a SEBI-registered research analyst or investment advisor. Remember, investing in the stock market always involves significant risks. All the data and charts you saw are based on publicly available information and my own research notes. So please don't treat any of this as a buy or sell recommendation. You should always do your own thorough research or consult with a CBI-registered professional before making any financial decisions. If you found this deep dive helpful and you want to stay updated with more stress-free investing analysis like this, please go ahead and hit that subscribe button and press the bell icon. That way you'll never miss an update. And now I want to hear from you. Which Indian-listed company should I break down next? Drop the stock name in the comments below, and it might just be the star of my next explainer. Thank you so much for watching, and as always, keep your investing stress-free.